Hello and welcome back to Dukascopy TV. I'm Natalie MacDonald. This week, the ECB and the People's Bank of China slashed interest rates in an effort to curb the global economic slowdown. Could the Bank of Japan do the same at their rate review next week? And what sentiment can investors expect from the release of the ECB's meeting minutes for July on Thursday? Nick Stamenkovic from Ria Capital Markets, Edinburgh, is on the phone with me now for our Week Ahead segment. Nick, thank you for speaking with me. If we take a look at the events of this week, firstly, it's been quite a tense week. We started on a high from last Friday's EU summit announcement that there would be a European banking union. Then the Barclays scandal broke ahead of rate decisions from the RBA, the Bank of England and also the ECB, and throw in a surprise rate cut from China's central bank. Talk me through how the markets have responded.
Well, initially we had some encouragement from the EU summit, which suggested that we're moving in the right direction, even though fiscal union seems to be some way off. There were hopes that the EU was finally getting to the nub of the problem, and there will be some short-term support for sovereigns, particularly via the ESM. However, the ECB dampened such hopes on Thursday, even though it cut rates to a record low 0.75%, the refinancing rate, and also lowered the deposit rate to zero. There was no hint whatsoever from Mr. Draghi that they were going to pursue further non-conventional methods, i.e. they weren't going to start the stability market program or launch another LTRO. And more significantly, he didn't signal that the ECB was in favour of giving a banking licence to the ESM going forward. Consequently, we saw a sharp sell-off in Spanish and Italian bond yields. Risk market sentiment accordingly deteriorated, particularly following some disappointing data in the US earlier this week with the NAPM and some other data as well. As a result, investors are cautious ahead of next week's Eurogroup summit and are waiting to see what happens to the German constitutional ruling on the ESM.
So if we turn our attention to next week, which release for you could be a market mover?
Well, I think once again politics will be the principal driver. As I previously mentioned, I think the EU's Eurogroup meeting will be important in the sense that do we see any hints of implementation of some of the measures that the EU summit hinted at, particularly in terms of the support through the EFSF or ESM going forward. And secondly, the markets will be nervous about the ruling of the German constitution on the use of the ESM, whether that indeed breaks the German constitution. I don't think that will be the case, but there is an outside risk. And clearly, if that did happen, then support for the sovereigns, particularly the peripheral markets, would start to weaken further, as the market was concerned the ESM would start to unravel.
The Bank of Japan will be holding its next rate review on Wednesday. Some investors had hoped that the central bank would offer further monetary stimulus to show its determination to beat deflation. Does this look hopeful, do you think, particularly in light of yesterday's events? And how closely should investors be watching the yen?
Yen recently has been pretty stable, even against the dollar. But there has been speculation that the Bank of Japan could announce further policy measures next week. They have set themselves a target of 1% of the inflation rate over the medium term, and I doubt they will change that. The latest Tankan survey was stronger than expected, with business confidence higher than envisaged, and that suggests that the Japanese economy is in slightly better shape than previously felt. Consequently, I think the BOJ will hold off from any stimulus measures for now. But if we see any signs of renewed weakness and/or deflationary pressures building up in the Japanese economy, then I think another round of asset purchase is likely in the coming months. If that was the case, then the yen could lose some ground. And as we saw earlier this year, the BOJ, when it announced its 1% target, the yen sold off quite sharply. But in an environment of looking for safe havens, the yen looks pretty well underpinned at the moment, though the dollar seems to be the strongest currency of all.
The ECB will be publishing its July monthly report on Thursday. In last month's report, ECB President Mario Draghi argued that it was up to governments, not the bank, to take steps to help calm the euro crisis. Can we expect much of the same?
Yes, it's quite clear that even though the ECB President Mr. Draghi welcomed the EU summit and some of the announcements that were made, they're still waiting for implementation of some of these measures, and they want to see some more structural reforms put in place, and they're clearly encouraging countries to maintain their fiscal consolidation. The message from Mr. Draghi at the latest press conference was that they'll cut rates to try to boost the economy and encourage banks to lend, but it's premature to expect another round of non-conventional measures. If the economic picture in Europe continues to deteriorate, business confidence falls further, and and the European economy goes deep into recession, then I think it's just a matter of time before the ECB has to pursue more aggressive policies, i.e. either resumption of the LTRO stability market programme, or indeed providing more support directly for peripheral countries, particularly Spain and Italy.
Thursday's also a significant day for China with the release of their real GDP data. Rob Dobson from Market told Dukascopy TV earlier this week that growth and unemployment are the two biggest items on the Chinese government's agenda. Would you agree? And what market response can we expect from this data?
Well, I think the latest move from the Chinese central bank in cutting the deposit rate and lending rate clearly shows their determination to keep the economy on an even keel. There have been growing fears that the Chinese economy could be heading for a hard landing, but latest data has provided some hope that we could be seeing some stabilisation. I expect growth to remain modest in the second quarter, and I think the authorities themselves have a lot of room both on the monetary and fiscal front to prevent a hard landing. Consequently, for the year as a whole, I expect GDP to be around 8%.
Nick, thank you for those comments. We look forward to hearing from you again soon. If you want to stay up to date on all of this data and more, then stay tuned to Dukascopy TV. Have a great weekend. Goodbye.